Have you ever wondered why two people can read the same investing books, follow the same market news, and even buy the same stocks, yet one steadily builds wealth while the other keeps making costly mistakes? What if the difference isn't intelligence, luck, or timing, but what they do every single day? Today's conversation might completely change the way you think about investing. Joining us is Dr. Adrian Cole, one of the world's leading experts in behavioral finance and investment psychology. For decades, he's studied the habits of legendary investors and uncovered the daily behaviors that quietly separate consistent wealth builders from emotional decision makers. Dr. Cole, here's my question. What daily habits do successful investors practice that ordinary investors often overlook? And why do those seemingly small habits create extraordinary long-term results?
One of the biggest misconceptions about successful investors is that they spend all day predicting markets. In reality, most great investors spend far more time managing themselves than managing their portfolios. That's because investing is less a battle against the market than a battle against your own emotions. Take Warren Buffett. People often focus on what he buys, but his greatest habit is patience. Every day he protects his attention, reads extensively, thinks independently, and refuses to let noise dictate his decisions. Those habits compound just as powerfully as money. Charlie Munger once said that avoiding stupidity is often more valuable than seeking brilliance. That's a daily habit. Instead of asking, how can I make more money today, successful investors ask, what mistake can I avoid today? That subtle shift changes everything. Another overlooked habit is creating space before making decisions. Our brains are wired to react quickly to fear and excitement. When markets rise sharply, greed whispers that you'll miss out. When markets fall, fear convinces you everything is collapsing. Great investors recognize these emotions without obeying them. They pause, review their investment thesis, and only then decide. Reading is another common thread. Peter Lynch, Benjamin Graham, and Ray Dalio all devoted significant time to learning, not because they lacked knowledge, but because markets evolve. Every article, annual report, and business story sharpened their judgment. They weren't chasing headlines, they were building better mental models. There's also the habit of keeping an investment journal. It sounds simple, but writing down why you bought an asset creates accountability. Months later, you can separate a good decision from a lucky outcome. That's how wisdom is built. Perhaps the most powerful habit is consistency. Wealth isn't usually created by one brilliant investment. It's built through thousands of disciplined decisions repeated over years. Small actions, saving regularly, reviewing goals, ignoring market noise, and staying invested compound into extraordinary results. Most people believe successful investors have superior information. More often, they have superior habits, and habits shape identity. Once you begin thinking like a disciplined investor every day, your financial decisions gradually begin reflecting that identity. The market rewards those who can remain calm while others react emotionally. In the end, your greatest investment isn't a stock, it's the mindset you bring to every decision.
What a powerful reminder. The greatest edge in investing isn't predicting tomorrow's market, it's mastering today's habits. If this conversation challenged the way you think about building wealth, share in the comments which habit you're going to start practicing today. If you enjoyed this episode, don't forget to like, subscribe, and join us for more conversations exploring the psychology behind smarter investing. Until next time, keep learning, stay patient, and remember, lasting wealth is built one disciplined decision at a time.